Welcome to the deep dive. We're here to really cut through all that market noise.
Yeah, sift through the signals.
Exactly. We've got a stack of sources today: Yahoo Finance, Investors.com, Reuters, Kiplinger, trying to piece it all together for you as we look towards Monday. Our goal really is to give you that clarity, that nuanced view, so you understand what's actually driving things.
Right. It's not just about knowing what happened. We want to help you connect the dots, understand why it matters.
And maybe spot what others aren't seeing yet, those sort of underlying currents.
Precisely. What to watch for next.
Okay, so let's dive right in. First up, a potentially huge development for tech. President Trump signaling new tariffs on semiconductors.
Yeah, this one definitely caught people's attention.
The potential scale is, well, it's something else. Possibly 200, maybe even 300%.
It's a huge number. And the immediate thing, beyond just, the sticker shock, is the uncertainty it injects.
Okay. Uncertainty for who specifically? Chip makers, obviously, but...
Chip makers, absolutely. Tech hardware companies.
Yeah.
Anyone relying on those intricate global supply chains.
Right.
And thinking bigger picture, this isn't just a short-term price thing. It forces companies to rethink their entire supply chain strategy for, the next decade.
Really? That's significant.
Potentially, yeah.
Yeah.
You might see shifts towards regional players, maybe different materials get fast-tracked, it could reshape things, even while it puts pressure on the big tech and chip stocks right now.
So for someone watching the tech sector this week, what's the key question? Is it just going to drop, or could it weather this?
Well, the initial reaction is likely negative, that uncertainty factor.
Uh-huh.
But markets adapt quickly. They'll start pricing in not just the tariffs, but how companies might adjust, the strategic moves. It's complex.
Okay, fascinating. Let's shift gears then. The Fed, there's been a lot of optimism, right?
A wave of it, yeah.
Indices near record highs, markets pricing in a rate cut in September, a quarter point.
And the odds they're putting on it are high.
Mm.
Over 85% likelihood baked in, according to futures markets.
So everyone's just waiting for Powell's speech at Jackson Hole.
All eyes are definitely there. That speech could either pour fuel on the fire, confirm the optimism, or
throw cold water on it.
Exactly. Alter the whole narrative, depending on his tone and message.
But it sounds like it's not quite that simple. There are other things pushing back against that easy rate cut idea.
Precisely. And this is where it gets really interesting, I think.
Okay.
You've got, for instance, a sharp jump in July's Producer Price Index, the PPI.
Inflation pressure's still there then, at the wholesale level.
Very much so. Businesses are feeling it. Then layer on top the geopolitical stuff.
Like the Trump-Putin talks. How does that factor in?
Well, think about potential impacts on energy prices, global trade stability. It adds another layer of unpredictability.
Got it.
And there's even been talk, about potential government involvement, maybe subsidies or regulations around Intel. That affects competitiveness globally.
So all these things kind of cloud the picture for the Fed. Makes it harder for them to just cut rates.
Right. It can make them hesitate, be more cautious, and that caution, if it comes through, could definitely dampen that market enthusiasm we talked about. Could weigh on sentiment Monday.
So if Powell does sound more hawkish, more cautious than expected, beyond just general market jitters, is there a specific area you think might get hit surprisingly hard?
That's a really good question. A hawkish surprise tends to hit growth stocks harder, obviously.
Okay.
Anything really dependent on cheap money. Yeah. So certain tech areas, maybe some real estate segments. But the sort of unforeseen ripple effect, it might be a much closer look at corporate debt across the board. How leveraged are companies really?
A reassessment of risk there. Makes sense. So, okay, we have this tension, market optimism on rates versus inflation and these geopolitical complexities. What about the consumer? Are they holding up?
Well, Friday looked pretty good on the surface.
Yeah, the Dow hit intraday highs, stocks closed up, United Health surged after Buffett's stake became known, and July retail sales were strong, up 0.5% month over month.
That sales number was strong. But, and here's the nuance, consumer sentiment figures. They actually dipped a bit, showed some weakening.
Oh, interesting. So not quite a clear signal?
Not entirely clear, no. It's a bit mixed. Are consumers really feeling confident? Or are they maybe stretching things a bit, dipping into savings, using credit? That's the underlying question.
Then we might get more clues soon. Big retailers reporting next week, right? Walmart, Home Depot.
Absolutely critical reports. Their results, and maybe more importantly, their guidance for the future, will tell us a lot.
Tell us if that bullish retail signal is strong enough to maybe offset some of these bigger macro risks we've discussed.
Exactly. Can consumer strength carry the day against tariff worries and Fed uncertainty? That's what the market will be trying to figure out.
Okay, so let's try and distill this down for you as you head into the week. We've got these potential, frankly, massive semiconductor tariffs hanging out there. Big uncertainty.
High stakes around what the Fed does or signals about rate cuts, especially with Powell speaking.
Yep, optimism versus those complicating factors. All right, the inflation data, the geopolitics, and then this mixed picture from the consumer and retail. Strong sales, but maybe weakening sentiment.
It really brings us to a key question for you to think about.
Yeah.
Will the optimism, the strong retail numbers we have seen, be enough?
Yeah.
Enough to counterbalance these pretty significant risks from tariffs, from geopolitics, from potential Fed caution.
Or does that uncertainty start to, take over?
Which way does the scale tip?
And maybe one final thought to leave you with. In a world this connected, how much does one announcement like tariffs or one data point like PPI actually matter on its own?
Compared
to those steeper currents, Global sentiment, how resilient supply chains really are. What's the true signal you should be listening for amidst all this daily noise?
It's a tough question.
Yeah.
And figuring that out is why, continuing to do this deep dive, looking beyond the headlines, is so important.
Trying to understand that bigger picture.
Exactly.